The U.S. bond market is currently blowing up along with other sovereign bond markets. I'm going to tell you what it means. I'm going to tell you how we got here, and I'm going to tell you what you can do about it. But first, I have to give you a little bit of education and a little bit of history. First, I'm going to remind you that bond yields are inversely related to bond prices. What are bond yields? Basically the return, kind of like a ROI. So if you have a high ROI to the bond price and the bond price is low, okay? For passive investments like sovereign bonds or U.S. Treasuries, the yield is a mixture of a few things, but three important things. Inflation. When investors demand higher yield, they are factoring in inflation, especially for a safe asset like a sovereign bond or a U.S. Treasury. So when bond yields are high, part of the reason why the market is demanding this is because they are saying that we're factoring in that there's going to be inflation. The next thing that goes into yields is risk. For a riskier country that could potentially default on their debt, we're going to want a higher yield. And the third thing that goes into factoring in bond yields is demand. If there is a low demand for the bond, investors are saying, I don't really want that unless I can get it for a cheaper price. Okay, now let's get on to where we're at right now. Last week, the Treasury did an auction for $25 billion in bonds. And for the first time since '07, investors demanded more than 5%. Also, other sovereign bonds, as they're trading around the world right now, the yields are higher. Also, as you may know, we have a new Fed chair that just came into office May 15th. This Fed chair is known for being a hawk. What does that mean? The Fed is responsible for taming inflation by raising interest rates through the Fed funds rate. A hawk is someone who's in that position who's most concerned about inflation, and so they are more likely to raise interest rates to tame the inflation. The opposite of a hawk is a dove. This is someone who's going to be like, we don't want to raise interest rates. We're a little bit scared because it's going to have some really harsh short-term effects, even though inflation is kicking our butt. So this guy that just come in, he's known for being a hawk. Now keep in mind, Donald Trump has gone on the record. He really wants to lower interest rates. So he used to fight with our last Fed chairman about, hey, you need to lower interest rates. And our last Fed chairman, Jerome Powell, aka Romy Rome, wouldn't do it. Why would Donald Trump put another hawk in office? Here's a conspiracy. The U.S. Treasury has the most outstanding debt that we've ever had. And the cost to service that debt is astronomical, meaning their interest payments that they have to pay on the debt is out of control. So we need to get those interest payments down. What's the best way we can do that? Lowering rates. But keep this in mind. Some people in the market think he might raise interest rates. I don't know. Don't be mad at me if I'm wrong. This is not a bet. I think he's going to lower them. So what should you do about it? Number one, I've said this over and over again, prioritize liquidity. These types of environments always punish people who are over dependent on refinancing, they're over leveraged, or they're just overall illiquid. Next thing, focus on cash flowing assets. I've said that over and over and over again. And last but not least, build skills and relationships, not just focus on your investing portfolio. When you're highly skilled and you have good relationships, that is not something that the market can touch, and you can always be compensated for it no matter how volatile the environment. All right, I just sent a dope newsletter yesterday. If you comment newsletter down below, you'll get that newsletter immediately, and you'll be on the list to get next week's newsletter when I go in depth with this, because I'm going to actually give you some real life strategy. Comment newsletter down below, and I'll see you on the other side.